Hi, Catalina here. I'm pre-recording a bunch of videos since I'm going to be out, so that's why I'm wearing the same outfit in the same space. And I know although our channel tends to speak to borrowers about student loan debt, as well as how to buy a home, because we work oftentimes with lenders to help them systematically understand who we can adjust student loan payment, improve debt to income, and close on a house. And so these are the areas of focus we tend to go into. We have a recent partner who came to us who asked if we can help them. Their core product is helping people understand the value of accelerating their retirement savings, and whether that means refinancing your student debt or getting your debt under control so you can start saving from a younger age. They want to show the impact and value of that. Obviously, it's no denying, and I can probably even give you, actually, I'll give you some numbers in this video of if you can put $200 a month extra, or just in general, if you're not putting anything right now towards retirement, what does that mean? Even if it's not 200, even if it's 100, even if it's 10, 50, 75 a month towards long-term savings, like what can the impact over your long-term financial health and wealth be? It's huge. And in fact, we can probably do some numbers directly here. It's very simple. We just have to bring up literally like the compound, their software doesn't, ours will do it as well when you set a goal to retire. But let's say or you could do it yourself by pulling up a compounding interest calculator, right? And let's say I'm just going to go to the standard investor.gov calculator. I am now showing only my camera, so you can't see this, so I'll talk through some of the numbers here. But let's say initial investment. Let's say initial investment is $200, but you're going to contribute $100 a month. Let's say $100 a month for 30 years, okay? 30 years at, let's say, interest rate 6%. Compound it. Okay, annually. Okay, we calculate. So let's say you start with $200 for 30 years. You contribute $100 a month, which is not huge. In 30 years, you'll have $101,000. Okay, that's pretty big. That's pretty huge considering $100 a month. $100 a month, if it was straight up simple interest, like not growing and compounding, it would only be $35,000. But if you let it compound, it actually, that $100 a month becomes over 100,000. Let's say you save $500 a month because now you get a job and you want to save for retirement more aggressively. And now that number is $500 a month. Well, by the time you're in 30 years, which is actually not that big of a number, because if you start doing it in your 30s, in 30 years, that's even before most people's retirement age, it becomes $500,000. 500 a month becomes $500,000. Not compounding, it would only be about 160,000. So compounding interest, time value of money is huge. Let's say you don't retire until even later because you start saving super early. And let's say you have 40 years to save $500 a month. Then over 40 years, that 500 becomes $997,936, over almost $1 million. It's literally $3,000, $2,100 shy of $1 million, okay? So clearly, the earlier you start, the more beneficial it is. And the reason I want to talk about this is because if we reduced your student loan payment through a federal program and got you loan forgiveness, and you're saving $500 a month by doing that, which, by the way, is less than the average our users are getting on our app now, then that $500 a month isn't even extra money you have to take out of your account. It's just less money you're paying towards your student loans, and we can help you get loan forgiveness ultimately. You don't have to wait until your 30s or 40s to start saving. You could potentially start saving even in your early 20s. And that will give you 40 years to compound that, which will make you a millionaire by the time you retire. That's really powerful information. But beyond that, I wanted to talk about the benefits of some tax advantaged vehicles because of course, like you should definitely, if you work for an employer who offers a 401k match, like which is free money, definitely do that and prioritize that. But there's also what's called Roth IRAs, where the government establishes an amount annually which you can contribute. This year it's $5,500. You can save your money. At the end of the year, you have $5,500. You can contribute to the day until tax day, April 12th, or whatever the tax day is for that year. You can contribute $5,500 and have it grow tax-free, which means you pay the taxes out of your income now, but the compounding over time, by the time you take the money out, that $5,000 may become $50,000. You don't have to pay income tax on the growth. And that's the benefit of a Roth IRA. So I talk about it because by saving for student loans, not just can it help people more able to afford a home because it reduces what's called the debt to income, it can also help people accelerate retirement savings. What's great if you're a parent or you're a lender watching this video and you have children, or you're at an age where your peers have children, they can work, depending on the state, 14, 15, 16, 17. And as soon as they get jobs, they can start a Roth IRA. So that is essentially getting children essentially to start understanding what does it mean to save for the long term and for retirement. And the reason this is so important is because we have a crisis right now in the United States. Something like 61% of Americans don't have $1,000 to their name, okay? 61%, which means if you drive a car, get flat tires, or you need all 4 tires replaced, which can cost, $400 or $500. Any type of big emergency, we don't have the savings for. So it's hard to fathom saving significantly for the long term when we're hardly saving for the short term, right? But it's really important to understand kind of the value and what life you want to live later on in life, because that can help us think about how do we manage our lifestyle a little so that we can have an emergency savings of 3 to 6 months and then think about long-term savings, right? Whether it's for down payment of a house, retirement funds, Roth IRA. The Roth IRA, by the way, is super easy to open. Any major brokerage has the capability, like a Vanguard, a Charles Schwab. I'm not endorsing any specific platform, but I myself use Vanguard. So you don't even need to know exactly. You go in there and say you want a Roth, you sign up for Roth IRA. You don't even need to know exactly what stock options or mutual funds or anything you want to invest in. Like, what's great about Vanguard is they let you just choose a targeted retirement date. So you can just say, I'm going to retire in 2050, for example, or 2045 or 2040, whatever the year is you want to target. And they will diversify that index fund for you. And you just buy a piece of that index fund that diversifies it for you. So that's what I love about my Vanguard account. Of course, I also play in other index funds, but that's for people who don't want to research how to. That's just a simple pro tip for those who just want to start a Roth IRA. Low touch, low maintenance, low fees, and low understanding of exactly what to do with your money, right? So I hope this video was helpful. Let us know your questions, comments below. Happy to answer. I personally started saving in my Roth when I was 22 years old, despite paying back student loan debt. I made it a priority. I was living in New York City at the time. It was expensive. It was expensive. I was living in New York City, but I got a roommate to lower my cost. I didn't make great money. I worked for the Manhattan District Attorney's Office, so it was a public service job. It was great. I learned a lot. I worked in the Child Abuse Bureau. I learned a ton about criminal law, about our legal system. I was thinking about being a lawyer at the time. Didn't make great money, but I got a roommate. I saved for retirement and paid student loans. So it is possible. And I hope my story inspires, because by the age of 26, I bought my first home. Before the age of 30, I got my second home. I went back to grad school. I got my third home, just bought a tiny house. So like wealth building does not need to be delayed because you earn a pretty average amount of money. Like wealth building does not need to be delayed. It's about the choices we make in our lives daily to help us move towards a more positive standing, right? So I hope this video was a bit educational, inspiring, and let me know if you have questions. We're happy to answer it. Please leave your questions, comments below, as well as please share this information to anybody with whom you believe it would be relevant. Like and subscribe. We would be oh so grateful. If student loans are impeding you or you feel like they're dragging you down, you don't know what to do, we're about to get kicked into repayment, please don't struggle alone. We're here to assist. MyLoanSense.com. I will link it in the description below, and have a great rest of your week.